The crypto markets are cooling off, and the correlations to 2019, the year before the last halving, couldn't be more clear, and in fact, they are downright eerie. That means that we could still be a little ways away from the ultimate, mega, face-ripping bull run of tomorrow. This is of course because the banking instability narrative has more or less become yesterday's news. But as we know, the charts love to find explanations, and if we look back at what happened just a few years ago, we might find ourselves with a rough map of what lies ahead. In the end, these are the moments that I personally have been waiting for. The cool off after the first truly convincing rally since what feels like a lifetime and a half ago. And this right now is the difference between people who are sustainable, who last in this industry, and those who come in as tourists and leave with only negativity. You see, everyone I know who's truly become successful in this industry has managed to outlast these tough times. Again, my message has been clear since the beginning of the bear market in 2022, which is that slow and steady accumulation once we've seen a bottom is the only strategy that I think is sustainable. However, I encourage you to figure out your own strategies. Let's take a look at what we could be looking at right now. Again, Eric's been on a mad tear of late. He said today, more high time frame downside is likely bearish, 84% chance of a 19 downside volatility. If that doesn't mean anything to you, then that's totally okay. Essentially, he's saying a 19 to 34% move to the downside is what could be possible based on his analysis. Again, this just shows that we've had this astronomical run up from 19K to 30K, and he's predicting a pretty significant retrace within that range. Now notice he's not predicting new lows or even really a break below 20K meaningfully. This is where I think we'll start to see some fear emerge, some lack of trust in the rally, some doom and gloom on the timeline, and that to me spells out opportunity. But even if I feel like I'm getting a screaming buy, I'm not going all in. I'm taking it slow and steady. You see, these are volatile, historic times of new normals, and I believe strongly that the turtle, not the hare, is going to be the winner. This is the price chart from 2019. As you can see, there was this massive run up, and then we essentially had a sideways down market for, almost a year really. You had from June, the end of June 2019, and then it really started bottoming here in December. It's really like a 6-month downward sort of failing rally chop to the right. Then if you look here, we had the beginning of a new market cycle. You saw this starting here, and I'll scroll down so you could see this. This was right at the beginning of 2020. But what we saw here was this was the pandemic response. This was the crash from the virus, where you saw this massive uncertainty in the markets. Now, the real question is, was this something that was an anomaly, or is this something that we might experience again? Again, what I told you is that once I feel like there's some semblance of a floor on how tight the Fed will go, that's when we want to start sizing up and actually buying dips, not necessarily FOMOing in at the top, but starting to average in on the down days. And this is where I'm planning to build a methodical portfolio, specifically buying the blood whenever it shows itself in the water. One of the most interesting, albeit a bit scary phenomenon going on right now in the markets is that we're seeing the debt ceiling having a non-trivial chance of a technical default. Now, will this happen? It would be the first time in American history, but we're seeing a lot of first evers going on right now in American history. This would mean effectively that the US debt would no longer be given its AAA zero risk status. And this is as an entire generation has withdrawn their money from the stock market and risk assets and dumped them into treasuries for the first time in decades. That would, of course, spell out one of the biggest traps in the world if those treasuries didn't end up being reliable. Now, I'm not saying this is what's happening, but the markets are certainly pricing in some pretty scary outcomes within the T-bill market. And this is, of course, due to a lot of the political grandstanding around the debt ceiling. Now, when will this play out? Will it ever play out? Who knows? But again, looking at the chart, we had our own version of a capitulation candle, and this came from uncertainty around the virus. Will there be another candle like this from a different crisis? We just have to stand by and wait. But what I do know, and what I do feel in my heart, is that after every halving, there has been an astronomical bull run in Bitcoin. And in a world of uncertainty in which we live, with nations buying up gold at a pace that we haven't seen since the 80s, the first time in my lifetime that gold has truly had a bid like this, something like Bitcoin, the digital gold, the far more transparent, transportable, transactable version of gold that's fully decentralized and verifiable on the blockchain with a fixed supply, you gotta think that Bitcoin really has a moment coming up here with all of the international tensions going on. Bitcoin will seem like the most reliable, the most dependable and trustworthy asset on the planet soon. Days like today, as the rally seems like it's cooling off, again, it could spike onward and upward. I'm not pretending to tell you exactly what's happening now. I'm telling you that I've begun my strategy of methodically buying in little by little. If we go lower, that's great, lower prices. If we go higher, that's great. I'm starting to average in. But the main thing is to remain unemotional. This was my strategy since the beginning of 2022, waiting for something to break. To me, that happened with the SVB bank collapse and the bailouts or the bank term funding program that introduced a monster amount of new liquidity thereafter, and then starting to average into the market slowly, methodically, without emotion. I'm going to be continuing to do this week over week over the coming months and years. I have buys scheduled out beyond 2024. This is the way, in my opinion, you keep it cool, calm, and collected. It's all about longevity. It's a game of will, not skill. I hope these videos are helping you get through these wild times, and if they are, you know what to do. Smash that like button, leave a comment in the comment section. Make sure you check out this video popping up right here on the screen. It's an amazing video. We put a lot of love into it. I'll see you very soon on the next episode.